International ownership of U.S. commercial real estate has increased significantly over the past decade. Foreign investors are drawn to market stability, strong property rights, and long-term income potential. But when it comes time to sell, many international owners unknowingly lose leverage during negotiations. The result is often longer sale timelines, pricing concessions, and reduced net proceeds. Losing leverage is rarely about the quality of the asset. It is usually driven by distance, limited market visibility, and misaligned representation. Understanding where leverage is lost is the first step toward protecting value. Negotiation leverage depends heavily on information. Local sellers tend to have a clearer understanding of buyer demand, comparable sales, pricing trends, and current capital flows. International sellers often operate with delayed or incomplete market insight. Buyers quickly sense this imbalance and assume there is more flexibility on price or terms. Even subtle factors, such as slower response times due to time zones or uncertainty around local norms, can weaken a seller's position before negotiations begin. Another major issue is generic representation. Many international sellers prioritize familiarity over specialization when choosing a broker, defaulting to large national firms or existing contacts. But leverage is strongest when a broker controls the buyer pool for that specific asset type and submarket. Without that specialization, listings fail to reach the most qualified buyers. Limited competition reduces urgency, and without urgency, leverage disappears. Perception also plays a role. International sellers are often assumed to be more motivated, whether due to currency exposure, regulatory complexity, or portfolio rebalancing. These assumptions invite lower initial offers and firmer negotiating positions from buyers. When motivation is not managed carefully, sellers face unnecessary price reductions and concessions, even with high-quality assets. Transactions involving 1031 exchange buyers add another layer of complexity. Buyers under strict timelines often push for speed and certainty, but that does not mean they hold all the leverage. Sellers without advisors who understand exchange dynamics may concede unnecessarily, misreading the buyer's flexibility. Leverage also impacts more than price. It affects certainty of close, timing, and risk allocation. International sellers without local insight often agree to longer due diligence periods, broader contingencies, or unfavorable closing terms, increasing the risk of retrading or deal failure. Losing leverage is not inevitable. The solution is alignment, not proximity. This is where Real Estate Broker Match adds value. ReBM connects international sellers with market-specific brokers who specialize in the exact asset type and location involved, bringing local buyer relationships, pricing intelligence, and negotiation expertise to restore balance at the table. They lose leverage when convenience replaces expertise. With the right team, sellers can negotiate from a position of strength and protect value from listing to close. Thank you for watching and listening. We appreciate your time and attention. For more information, please see the links in the description below. You can visit our website or read the full blog for additional insight. realestatebrokermatch.com